person or someone who writes it is basis the hard coded rules, and they cannot deviate from the rules. Everyone can see the latest version, but again, there is a referee who can tweak around with this. You're in a digital notebook analogy of a blockchain. Once written, it's written. You can't do anything. And imagine like pages. Okay, page number one, page number two, page number three. You will have to write page wise. You can't write on page number one, then go on to page number three. If a server crashes, it's gone. In a blockchain analogy of a digital notebook, there are multiple copies of that particular version created. So even if one notebook, two notebook is lost, it gets replaced by others who have that. So in a nutshell, that's the difference between cloud and blockchain. By the way, both has applications. You can't compare both because cloud is good in something, blockchain is good in something. In the subsequent slides, we will be coming to that. Now, the technical definition. The pages in the notebook, in blockchain language, it's called a chain of blocks. Page number one, page number two, via a hash, a technical concept, they are linked to each other, the second page to one. Those are nothing but a chain of blocks. Each block holds the information. So again, you call it information. Once added, the block is locked in a place. So there's a concept, you would see blockchain engineers talking about a lot. Immutability. That's nothing but locking. Okay. Once it's written, it's written. Okay. Blockchain engineers also will talk about cryptography. What it means is, in a notebook, if you write, there's no security. Everyone can see it. But in blockchain, automatically anything gets written, it's kind of encrypted using cryptography. Again, so which is, in a cloud, you will have to put a PGP encryption, etc., etc. But in blockchain, automatically everything is cryptography. So cryptographically secured. So this is the analogy which kind of explains what blockchain is vis-a-vis cloud, or in a nutshell, what blockchain is. People talk about decentralization. It's nothing but in a game, everyone has a notebook. Think about that analogy. That is decentralization. There is no single referee, no single boss. So I hope using this analogy, I'm able to explain what blockchain is in a nutshell. Again, think about how our systems currently are built, the financial systems. We have a money ledger, which is RBI or your banks. The securities, they move around on a separate settlement and clearing ledger. Okay, in a way, financial systems indirectly are nothing but ledger entries, right? I mean, there are veteran bankers here, willing to learn from them. But the way I see the entire financial infrastructure, I see it as set of entries, debits and credits. Okay, so the way I imagine the financial infrastructure is this. There are railway lines. Currently, there are multiple railway lines. Money moves somewhere else. The securities move somewhere else. There are other assets as well. For example, land. They have a separate register altogether. Some of them are not even online. For example, only 3 of the 28 states, currently the land records are on blockchain. In countries such as US, it's taken up very well. So all the assets currently, each one of them have multiple ledgers. They were created as on need basis. Let's say it was first money layer was created, then people imagine security layers, new companies were set up, new settlement was created, then multiple countries wanted to talk to each other, multiple systems were created. So there was no common denominator standard. People were just building basis the need. Imagine this build up happening over 100 countries over the last multiple decades. What has happened is, yes, the system works foolproof completely, and thank you for that. But if we have to rewrite this system, make it faster, make it cheaper, make it efficient, can we now think top down as against bottom ground of our approach earlier, which is nothing but, can all the countries agree on a common standard where such things can pass? Can there be one railway line where settlement as well as movement of these financial assets can happen? Imagine if one railway line has to talk to each other. Yes, they talk, but it's a build up. Imagine if you have to talk to, let's say, multiple security agencies across the world. Yes, globally, there are security agencies. But like I said, there are frictions. So, Finternet, or let's say future of finance infrastructure, is nothing but, in a nutshell, perhaps giving them a single ledger. Even if they are not giving them a single ledger, each country can have their own standards. But the railway line is constructed in such a way that talking to each other becomes easy, as against the earlier system. So in a common sense parlance, this is it's not rocket science. This is the simplicity of what this solution is all about. Again, the logos are for our representation only. What I just explained, let me talk in using an example. This is not a live case. I've just used logos. So the commercial paper, which is a seasonal kind of an industry in India. Okay, if let's say hypothetically assume Polycab has to do a commercial paper issuance, it will have to interact with its IPA, perhaps manually exchange the promissory notes. There will be a rating agency involved. It would be a disjointed function to approach the rating agency. Government has put up many, RBI has put up many regulations. So, for example, manually you need to log into their systems and record it, which is run by the CCIL. Uh, they are building a compliance system where the companies and all the parties will have to go and regularly put compliance reports as well. If investor is to be there, investor is completely disjointed. I'm just taking hypothetical example of Premji Invest here. The securities, or let's say commercial paper, moves on a different railway line. Okay, maybe a money market instrument line. The money, the fiat movement happens differently. It's not happening in multiple lines. Imagine if all of them are on a same line. Again, the analogy here which I mentioned, things would be so much easier. Okay, the asset movement, the the money movement, etc., etc. Is it so easy? Is it so easy? Then why people are not doing it? It's not at all easy. Each and every part has to be brought in via POCs, which is where it takes a lot of time and a lot of governmental effort. The regulation needs to come in. Okay, just by, if I tell to a 10-year-old which diagram is simpler, of course they will say this is simpler, this is the better way of working. But things are not so simple in the financial world. It cannot happen overnight. It's going to take time. It's going to take a monumental effort. Again, I'm a firm believer, if majority of the countries do this, only then the benefit can percolate more. Because my view is there are capital surplus countries, there are capital deficit countries. This capital movement between multiple countries has to happen. And if something like this happens in future, I think law of averages and the deficits can be controlled a bit, which happens currently in the market. This diagram will bring little bit more complexity now. I hope so far you understood what blockchain is. Again, just a reiteration: digital notebook, a decentralized digital notebook. Always go back to the example. Okay, this is what blockchain is. Imagine, visualize this example in your mind. Common railway line as against multiple railway lines. This is a diagram which has been taken from Finternet paper of Nandan Nilekani. He envisages even far more ahead. He says that all the current banks, all the financial participants, they can operate the way they want in the current system. But like on an ONDC, we use something called as a seller app or a buyer app. Perhaps they can use an on-ramp to get on a common ledger, which I call it the golden ledger. Okay, as against they changing their internal systems, which is highly impossible. Can they latch on and on-ramp themselves, okay, to a common ledger? Imagine all the banks, asset companies, registrars, even the service providers, they come on a common ledger. Even the KYC via identity, via digital signature, everything comes on a common ledger. Thus, using this way, as against your internal systems being changed, just by using an on-ramp, you can still achieve the common railway line because you're pinging the golden ledger regularly. Many countries will have such golden ledgers. One golden ledger can talk to another golden ledger because these ledgers, the standards are the same. Again, introducing a technical term here, ERC standards are typically the standards which these ledgers are based on. Nobody, a blockchain is a set of standard already written, which is where one ledger can talk to another ledger. We can always debate about the frauds, etc., which can happen, but over the time, just like in the financial infrastructure things and streamline, things are beginning to streamline here as well. So, for example, just one stable coin, I think $60 billion of one stable coin is moving at the moment on the internet with zero fraud. So just setting things in perspective. So this is what Finternet is all about. Mass has a rival of Internet called as GL1. UK is working on UK with EU is working on a similar golden ledger called as RLN. US is working on multiple such golden ledgers. Several banks have their own private ledgers which they work on, which is akin to this. Again, don't take my statements, as it is. I'm just trying to make it simple. So, for example, JP Morgan has its old golden ledger, which earlier they used to call it Onyx. Now they call it Kinesis. Okay, so really, things have started moving towards this golden ledger. As against world coming onto world golden ledger, I see big ecosystems having their own golden ledger. And in future, we may see these golden ledgers talking to each other, which is what Finternet paper also envisages. One more example on how, if in future this comes, how things will streamline in the world of finance. On the top is the current typically 11 processes which happens when I have to send money to you. One institution has to send a money to another institution. Okay, these 11, 12 flows will multiply when it's cross border. Think how difficult this is. This 11, 12 process domestically, perhaps 20 processes on a cross border will change to two actions when in a utopian world. It may not be utopia full, but even let's say 50% of the participants come on a golden ledger, a lot of such processes can be streamlined. So for example, the seller here in this example sells a share to Maria. Okay, automatically the sale happens and there's a smart contract which pulls the money. Okay, the money which flows on blockchain can be in various forms. Again, forget about that. I will handle all these concepts later. The money can be tokenized deposits in this example or can be CBDC. Because the seller, the moment has transferred, it's handshake, atomic settlement. While parallelly the share is being transferred, the money also is being transferred. If the share transfer doesn't happen, the money transfer doesn't happen. And all of them are on a common infrastructure. It can be a wallet as against demat accounts of, let's say, Manish Gadia of India, demat account of, let's say, US of Maria. So imagine currently they can't even talk. Tomorrow, if they are on a golden ledger, just by using one universal demat account or a wallet, I'll be able to interact with each other. And because all the institutions are on a single ledger, the money movement also can happen on a ledger simultaneously. So, it's again, I'm just simplifying it. It's not so simple. Okay, for each and every elements to move on the blockchain, it's going to take time. But I can tell you the movement is happening as we speak. Okay, again, can't speak more. US was on the fence for a long time, but over the last 3-4 years, since the US have adopted and kind of set vision for such technologies, rapid movement across the world towards these golden ledgers have started happening as we speak. Some more things from India. I was at the Global FinTech Fest last year. Talking something from abroad or let's say a head of innovation of some bank talking about this. No, these are India-based CTOs of top India's registrars and depositories. They are talking about this. First of all of them have taken blockchain from POC to implementation. Some are working on compliance, some are working on joint KYC, etc. But this is what they had to share: when to use cloud, when to use blockchain. Okay, what they like about blockchain is page number one is linked to page number two. It's a chain of block. So when it comes to transactions, okay, with timestamp and all, one transaction, then next transaction, then next transaction. In such scenarios, blockchain works better. Cryptography, security wise, is from a cloud database perspective, it's better. They have tested it. Again, the world has tested it. When it's a proper blockchain with proper governance, block deletion cannot happen. Once entered, it's entered. Okay, you can only keep on adding to that particular ledger. Or so, because of that once entered, it's kind of automated backups. There's no backup as such which is required. Blockchain by its nature is backed up data. Owner of the infra can be all participants. So if let's say 20, 30 banks have to work on something, okay, in India, and if they have to work with, let's say, 20, 30 banks of the world, okay, all of them will say, I will run this, I will run this. Imagine if they have to come on the same page to agree on something, it will be very difficult, which is where a solution there. I'm not saying it's not possible. There are various consortiums where people have worked together. But if they deploy a database such as a blockchain in nature, all of them perhaps can play a part and can be an equal role. As against one company, one body being the top, all of them can be a participants and can be the owners of that particular database. Blockchain doesn't work when you have to transfer a lot of attachments. So in case you are exchanging attachments with each other, which participants, blockchain doesn't work there. Cloud is better there. Okay, so blockchain is only for transactions and for data. Public chains are cheaper than cloud. So I've been in this industry for about 3 years. I've deployed various blockchain native financial infrastructure in multiple parts of the world, starting from Europe to in APAC. The kind of transaction fees that I had to pay, it's 1/10 of even 5 paisa sometimes. Okay, so imagine how cheap public chains are, and only the hash goes, not the entire transaction goes on the public chain. There are technologies around where I can encrypt and put a private key to those transactions as well. So I can even hide those things on public chains. That's how cheap public chains are from a financial infrastructure perspective. Lot of banks, having seen the frauds in the public chain, are going for private chain. That is good when you have a lot of participants, when you have a lot of volumes. So if someone like JP Morgan does this, it's good. Otherwise, cloud will be ultimately coming out to be the cheaper one. Because to run a node of a private chain, it's about $5,000. I deploy my package on the cloud, it's about $25,000. Imagine if I have to run the node as well as deploy, it's going to be costly. Okay, so it's not like blockchain will replace everything. You need to run it past all these points. To me, these are very important points. Go through all these points and your use cases, and you will come to know which database or which underlying technology will be better. Some of the other things which I personally believe in: cross-border settlement, not domestic. Sorry, my mistake here. It should be cross-border settlement. I don't believe domestic would be better. I think India has shown that domestic can work irrespective whether it's blockchain or not blockchain. I think cross-border settlement, where we have a lot of friction, can be 100 times better using blockchain. At the moment, there's a problem about MSME capital. Capital is not reaching them. They do have credible instruments which they can make it liquid. For example, promissory notes. Okay, even in domestic situation, currently promissory notes are, is having not so much important wheels. I can't port them cross border. If there's a tokenization concept in blockchain, which I'll be talking about later, using that, I will show how MSMEs, the credit gap which exists can be reduced a bit if we use such technologies. Tokenization of securities, again, I will talk about this later. It has been proven in most of the countries that if capital market infrastructure moves to blockchain, lot of synergies, lot of inefficiencies when it comes to cross-border capital markets can be reduced. Again, one more disclaimer. Once again, these technologies are at the POC and early scale stage. The volumes in some of the places such as Switzerland have come up. Some of the places such as Europe, it's rising rapidly. Some of the areas such as money market funds in US, especially as well as real estate, it rising. Is it rising left, right, center, everywhere? No, there's still time to go, which is where when I will talk about trends, I will share in my view when the volume can pick up. Okay. Again, one more thing which I come across is the KYC. At the moment, if I go to a bank, I have to do a KYC. If I go to a register, I have to do a KYC. If I go abroad and open a demat in US, I have to do a KYC. It's the same set of documents. If I have to take a loan, I have to do a KYC. Web3 has already solved for it. Okay, if those technologies start getting acceptance, I think acceptance of KYC, not just internally in India, even on a cross-border way, can happen in a very rapid way. So which is why whatever I just talked about KYC, it's called as Web3 ID. The techies in the blockchain world have given everything their own names. So they call it a Web3 ID. I've already talked about how I need to open. So I have shares in US. I had to open another demat account there. I buy shares in India. I have to buy another demat account there. Why do I have to do that? Can I just use a global infrastructure for that? Okay, the technologies that we are talking about empowers that, which is where when you deal with tokens, all that you need is just a wallet. Okay, and that wallet will work irrespective of any asset, irrespective of any country, irrespective of any type of asset. Of course, it works well when the regulations are in place. At the moment, regulations are just coming up. I will be talking about regulations also at the end. Where are we with respect to regulations from these technologies perspective? Okay, so just a quick time check. 30 minutes through. I've got another 15-20 minutes. Maybe I'll try to fasten my session a bit. At the moment, this is where we are. I mentioned we are at the sandbox pilot early scale stage. Some of the countries have moved beyond early scale stage. Some of the sectors are moving beyond early scale stage. To my mind, mid to late 2026 is where the growth stage of such adoption will come. I will skip this for the time being. Okay, these are nothing but where is it? But yeah, one important stat is a lot of people will say, is CBDC. So I talked about various currencies which will ply on such technologies. So there are currently three. One is stablecoin, which is backed by fiat reserves. Another is deposit token. And third is CBDC. 50% of the world CBDC would be based on this one. They would not be using cloud or other infrastructure. They would be using DLT linked infrastructure. It's proven. And this data is by Swift. So what is stablecoin? Stablecoin is nothing but a representation of US dollar, which is kept in a private firm's account. So let me take example of USDC. It's run by USDC Foundation. I think they work with few banks such as Bank Boni in New York and a couple of other banks. They keep fiat US dollars as deposits or in government securities. Backed by that, they are issuing USDC stablecoin on this blockchain infrastructure. So if a private company does that, it's called a stablecoin. If a bank mirrors what is there in your current account and gives you an additional wallet that transfer out of 100 rupees 50 into that wallet, and that wallet is linked to chain, it's called as deposit tokens. It's like a mirror of your current account. And the third is CBDC. Okay, again, lot of people. I am quite aware of the intelligence in the TFW, and I think twice before I mentioning that. But don't take what I'm gonna say now at the face value. But to me, if I have to explain to a 10-year-old what CBDC is, it's just it's a new currency. Okay, what issued by RBI on chain. So just like if private company has to do that, it's called a stable coin. But if a government has to issue something on chain, it's CBDC. If they use, of course, the blockchain technologies firstly. So that's what CBDC is. Now I'll move quickly towards slightly more complexity of some of the terminologies on blockchain. Again, as a banker, you need to be knowing the basics. Okay, people very soon, once AI comes in, all your products, okay, right from documentary credits to open account to cash management, payments, okay, these things would be gaining traction, and which is where it's basics you should be knowing. So all of us are aware about app, right? We use Google Docs, Dropbox. We are on Zoom currently. Okay, these are the cloud. These are nomenclature when you use a cloud-based infrastructure. On blockchain, what you deploy are smart contracts. It's as simple as that. Okay, what's the difference? These are the differences. Okay, a app is deployed on a cloud. A smart contract is deployed on a blockchain. No one can change it once it's deployed. Again, go back to the decentralized nature of the blockchain. You cannot change it. You can just take it down or update it. That's what. Developer can do whatever it wants with the app because they own the app. If it's a public blockchain, the code is visible. On an app, code usually is not visible unless you are a very big techie. Runs 24/7, can't be shut down easily. Even if people have loaded the smart contracts, they themselves, their nodes goes down or the participant is not there anymore. The smart contract keeps on working, keeps on doing what the algorithm it's asked to do. But here in an app, if the company shuts down, the app also shuts down. Okay. Yeah. So that's what the construct of smart contract is. So imagine it's sort of a advanced app put up on a blockchain. Analogy, smart contracts are vending machine, SaaS code or an app is a restaurant. In financial infrastructure, you want something which is watertight, which is why you want something like a smart contract, which is more vending machine akin. Again, apologies if my analogies are very bad, but I believe if we can visually register such things in your mind, later on, you'll not forget what I'm talking about. And I know a lot of people here would already be knowing such things. If after my session you want to share something, if you want to add what I've shared, please feel free to do so. I don't claim I know it all. I'm learner every day. We go to another interesting topic as well. You would be hearing a lot of things about tokenization. Okay, again, everywhere people will talk about tokens. Uh, don't get perturbed if you don't know what is tokenization. Tokenization is nothing but demat on steroids. Currently, if you buy equity share, the asset just comes and sits in your demat. Are you able to do anything around it? Nothing. Okay. There are services built over that infrastructure which can do things for that equity share which is sitting in your demat account. For example, buying and selling. For example, using an ICICI Direct, you can set up a program saying that if equity share reaches this, sell off. By itself, that demat can do nothing. Imagine if you are able to program this demat. That is what tokenization is. At the moment, the money which is there in your current account, can you do something with it? No. When you go and give it to the grocery, okay, there are services built over it which empowers you to send that money and credit the wallet of that particular grocery shop. Okay, there are services built so that I can put up a sort of a merchant code that if it's a gambling shop, I'll not be able to use my card. These are services built over that asset. But tokenization is you build the services inside it. I can program the money saying that track the use case of this particular use. If my money is going to a wallet which is owned by a gambler, do not go. After 60 days, come back to the original account. I can program the assets the way I want. For example, in equity shares, currently when I open my demat, I do the compliance bit. And ICICI Direct every year does re-KYC. That's where I do compliance. When I tokenize or I program an asset, I can inbuild compliance in it. For example, if I'm selling the share to Pinakida, it will share, is Pinakida blacklisted somewhere? Only then it will go and credit in the account. Okay. So in a way, assume that to be tokens and nothing else. Okay. Whenever somebody talks about tokenization, think about DMAT on steroids. Putting a digital programmable representation of that asset on blockchain. That is what tokenization is. Again, an analogy. Think of blockchain like a video game. The game itself, what the number of games you can play on a blockchain can be called as smart contracts. The coins which are used in that games can be called as tokens. You can earn, trade, and spend them. So whenever somebody talks about tokenization, blockchain, smart contracts, go back to this analogy. This is my thought. Again, happy to disagree with a lot of people. Uh, 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 Whenever I meet a lot of bankers, I think 90% of them they don't believe in CBDC as a concept. My belief is uh, till about 3-4 months back, obviously nobody was acceptable of any digital currency except deposit tokens. The digital currency which could have plied and worked very well on a new financial infrastructure was CBDC. Because as I said, 50% of them currently under production are DLT based. I personally don't see so much of value in the domestic retail CBDC, but when it comes to cross border, I believe WCBDC has its small part to play to reduce the friction in cross border. So, for example, atomic settlement, which I talked about, when I'm, let's say, subject to this happening, only then the money can move from Manish Gadia's wallet via CBDC to, let's say, his brother's wallet in US. As against taking 24 hours, it can perhaps take up just a couple of minutes. I've already mentioned to you the costs on public blockchain movement of such money is sometimes 5 paisa, sometimes even less than 5 paisa, sometimes even 1/10 of 5 paisa. Okay, that's the cost that we are looking at. I can program my money as well, which I talked about. And CBDCs uh, obviously depends upon government, what aspect it allows. At least from an India perspective, and most of the governments I interact with, most are open to allowing programmability of CBDC. And tomorrow, when AI comes in, when in the world of agentic, when bots are talking to each other, such programmability feature will play an important part. Imagine perhaps 99% of the things of the financial infrastructure being run on such technologies, which is AI and smart contracts. Okay. Costs, of course, so these are some of the things why I believe WCBDC has a place in the industry in the times to come. I was in Gift City just early this week. Gift City will be coming with its, hopefully, with its tokenization regulation in about 6 months. The consultation paper is already out. It's a big consultation paper, about 70 questions. I have answered that. In fact, I have answered in as many 70 pages as well as to what they should allow, what the regulation should be. But to my mind, this is what will be allowed. Again, slightly more technical, but let me parse it for the bankers here. Capital market tokenization may get allowed in Gift City. So assume a pack of land is owned by a fund or a company. The ownership of the fund, the equity shares can be tokenized. So as against having demat equity shares, it will allow for a tokenized equity shares. Tokenized equity shares mean programmable equity shares. I can fractionalize that equity share. I can pledge that equity share. The owner of that land can be 2,000 people. 2,000 people will be able to take out their share and pledge and take loan against it. So, such things will be allowed in Gift City. I'm hoping again, I can't confirm that. Tokenization of bond also may be allowed in Gift City. So India perspective also, I think you would see something coming up shortly. We would be also on this new age financing map. Okay, so this is, I wanted to cover very quickly, next 5 minutes, then we will open up for Q&A. Okay, these are the tokenization of bonds, etc., which have happened. And Siemens, incidentally, have issued third tokenized bond. they are saving 60 bips in each bond issuances as we speak. 60 bips on a 60 million bond. I mean, that's credible enough. Okay, CashLink Germany says that if capital market moves to tokenization, each issuances can save 1.2%. Commercial papers. Siemens incidentally have started issuing commercial papers, tokenized commercial papers as well. The entire process of issuance and subscribing took about 93 seconds. Imagine our commercial papers if we can get more liquidity. Okay, several banks such as Citibank, SG Forge, in a small way, in their internal ecosystem, they've started adopting these technologies. Tokenized asset they've started offering to their ecosystem. So SideApp, as they call it, Citibank Digital Asset Platform, SocGen by incidentally have a stable coin as well called as EuroC. Okay, this is the 1.2%. If somebody wants to know where this 1.2% is getting saved, I have put up that as well. In the interest of time, I will skip this. Deep tier financing. Okay, at the moment, I don't have any payable instrument which I can transfer digitally from tier 1 tier supplier to tier 2, tier 2 to tier 3. Imagine if tokenization gets allowed of the negotiable instruments. Okay, perhaps what Suzuki, let's say, does payment, let's say, of 100 discounts, 100 rupee invoice of tier 1, they can program that token in such a way that 60 is used by tier 1, 20 is used by tier 2, 20 is used by tier N. They can lubricate the entire supply chain. Again, deep tier supply chain finance applications of such technologies. Okay. I think so. Abhin, maybe I'll ask you. I have quick M letter to cover. Should we take this up next and should we take a pause here and go on to questions? If you can unmute and let me know and guide me towards this, I'll be guided by that.
Manish, I think we have quite a few questions which have already come in the chat box.
Mhm.
So I guess what we can do is that we can take the questions and then, Pavan, we can uh, subsequently, if we have time still, we can go ahead and,
Sure.
uh, right, we can
That
do
sounds
that.
great. So Abhin, I've just stopped sharing and I hope my video is visible now. So over to you,
Yes.
Abhin. If you can present questions to me one by one, happy to answer.
Yeah. So basically, the first one from Ketan, we have a question. There's a movement away from blockchain due to higher maintenance cost and infrastructure. Any reason why?
So again, my opinion, so there's no answer to this. My view is that there is no movement apart from blockchain. What I have seen over the last 4 months, I've never seen the action which I've seen over the last 4 months happened on the world of blockchain. In fact, the last 8 months and this last 4 months, if I have to put, I would say I have seen in the last 4 months 10x action happening from the regulated financial institution in this industry than outside. So to me, it's a movement back to this blockchain which has happened. Uh, so, for example, have a look at Japan. There are banks, the number one, number two banks are working on issuing their own stable coins. Have a look at EU norms. EU never had regulations around that. Look at the EU DLT and the MiCA norms which have come, which have regulated stable coins now. Go to GCC. It was only UAE in the radar, but over the last 4 months, it's Qatar and Saudi Arabia have come up with their own tokenization slash future of finance regulations. India, for about 2 years, we were not talking about it. All of a sudden, last month, there's a tokenization consultation paper out from GIFT City. And I interact with the RBI FinTech team as well. I can share that they remain hopeful uh, and subject to the use case being proper and the industry bodies and the associations coming together and something credible can be achieved, can be done. NPCI, I can tell you, is working on the Hyperledger Fabric, which is a private chain. So my answer, Abhin, there would be to me personally, it's contrary to what the question was.
Okay. No, I think
Andre is replying as well. Andre is authority on such technologies in Europe. He's also I think, supporting me on this endeavor. Yeah, sorry, Abhin, go ahead.
So there are, I believe, two questions which are related, one from Ganesh sir and the other one from Vidya. So Ganesh sir saying USA has always lagged behind in implementing blockchain-based settlement from a regulatory perspective. And the industry frets that the driver countries are developing infra in islands. How will we therefore enable a global seamless payment and settlement? And I think on the same chain, Vidya is asking, interoperability was one of the key challenges. You spoke about something called ERC. Is that something which is going to facilitate talking between two systems?
So, two questions. First, uh, US has always lagged behind. Uh, there are islands, pockets of acceptances coming up. Okay, how would everyone come on the same page and develop, and develop a vision for this? So, first of all, I would like to give an example of what is happening in the world of EBL or M letter, where I think at the body level, UNCTAD came up with a legal framework around M letter that, guys, whatever is happening on paper will not do. Let's left, right, center, go for it. All of you guys come up. These are the legal frameworks. Come up with laws, whatever required in your countries, which at the mother level, at the UN level, they've done that. And now what has happened is slowly but surely, most of the OECD countries one by one are accepting it. UK has approved it. Bahrain, Qatar, Abu Dhabi, Singapore, France have approved it. In India, in the budget speech, we know that digitization of trade documents using M letter will be coming up very soon as well. Uh, so you see, at the mother level, it has to be a top-down approach. So even in the payments, only now, first of all, after what US have said that no CBDC stable coin, yes, people and banks have started issuing stable coins. In times to come, several key authorities such as MAS, perhaps with BIS, they're already working on various projects. So incidentally, I forgot the name of a project. There are 30 central banks along with MAS and BIS working on something like this. So it's a long process, Abin. It takes time. First, they will do POCs internally. It has to start with a white paper. Then they will agree, okay, these are the standards. But uh, no matter what, DLT, if they use DLT, the standards of DLT are already set. So somebody said about ERC, even if it's non-ERC, okay, the standards are set. The talking between blockchains are easier. Have a Google on CCIP protocol, okay, by via which one chain can talk to another. There is again, I'm forgetting names. Even in Europe, there are governments, multiple governments working on interoperability projects that, okay, instead of private interoperability protocol called as CCIP, can government related CCIP kind of protocols be set up? Because various islands, as you rightly know, will take up such blockchains. How will these blockchains talk to each other? Unlike the old infrastructure, where it requires customized effort, here the standards are already set, which is where the talking between chains would be matter of agreeing, like how ICC has agreed in M-letter DSI standards. Fit Alliance, BIMCO, all are following this ICC DSI standards from a ELBL perspective. So it's matter of time in the months to come. I'm not even saying years to come. You would see such large scale adoptions where first continent will perhaps come together, then perhaps more regional integration as well. So that's my answer, Abhin, on that. Again, a lot of my answers may be philosophy, but at this stage where we are, it's having rapid growth. Every week, things are changing. I hope I could give something credible, but at the moment, I don't. A lot of the industry is at the POC and early scale stage at the moment.
Thanks, Manish. Moving on to the next one. So Subbu has asked, CKYC was introduced in India about a decade back, but even today, most of the financial institutions insist on separate KYCs. So in this backdrop, how do you see various instruments across different institutions settling transactions seamlessly? Will an elaborate exercise be required again for using blockchain to streamline this?
So Subbu thank you so much for the question. First, on CKYC, I tried using it, okay, about 2 months back. The reward which I get from CKYC, half of the documents I'm not able to read. Okay, so there are always early adopters, there are followers, then there are laggards. So I always like to be the early adopter, unfortunately, and I thought, can I use that? So thus, to me, again, I don't want to share this in a forum, but again, don't quote me anywhere. I think there are system challenges in implementation of CKYC. Had the system challenges been taken care of, which I'm told are getting taken care of, I see wide adoption of CKYC because it's no brainer. When I have a DigiLocker, okay, I can share my Aadhaar just by DigiLocker. And I mean, think about it, DigiYatra. Okay, I've just put it on one ledger, which is a DigiYatra ledger. It's become my boarding pass. Wherever I go, I just use that. Why do I have to flash my boarding pass again and again to everyone? Okay, so to me, CKYC is a no-brainer. And back in 2014, when we were launching factoring, I did a representation in BKC to NSE IT. I think that time NSE IT was looking into CKYC. So yeah, it's been going on. I have a different view with respect to blockchain. Unlike we are creating new technology, new thought process, systems, Subbu sir, here are already there. uh, Tokenized KYC, Web3 ID. In millions, people are using it left, right, center in various DeFi use cases which are native to blockchain. Regulated institutions and government will have to just take a leeway and adopt those and put out regulations and standards so that it can't be forged. So it has been tried and tested technology where systems will not fail is what I can say. So that's my answer, Abhin, to Subbu sir's question. System will not fail here. Systems are set. So the experience of using a Web3 ID will be easy. Now, of course, it's about money. When it's about money and somebody's individual identity, we better be safe than regret. So I'm completely with Government of India and various governments' approach to be on the fence, looking around, let the momentum build, let's say some developed institutions take it up first, and then perhaps expose our country towards it. But to me, the way I see this is not in the immediate next 2-3 years future, maybe 5 to 10 years future. I think it's inevitable. That's my Abhin answer to Subbu sir's question.
Thanks, Manish. I think that's a very comprehensive and elaborate one also. Now, there's another question from Ketan on use cases in trade finance. I mean, I'm also seeing a number of comments from Shankar and Andre on this. Uh, Most large banks have done POCs in trade finance and not taken this further. Any reason why? So Andre has said that MLATR is probably the most pragmatic use case. IMDA, Trade Trust, Enigio, Shankar has given the example of Contour. So Ripple, again, is another example that was given. Again, challenges with respect to moving away from Swift or getting institutions to move away from Swift. Any thoughts on this? Anything that you want to add over here?
Yeah, so thanks, Ketan, for this question. Again, sharing my thoughts. So let's start with M-letter, which Andre also happened to mention. Uh, at the moment, UK has passed the M-letter. India has not. Okay. For this use case to pick up, both India and UK will have to pass that M-letter, or at least in GIFT City. Okay. That's where this corridor trade can be moved up to this particular use cases. Okay. One, it cannot happen with just one country. Okay. When it talks about regulation, the use cases have not picked up primarily because about regulations. Why I can explain that is have a look at China. China has a digital payment undertaking instrument, okay, with a legal validity. There's a company called as LinkLogis, okay, does about 15 to 20 billion deep tier finance on blockchain. That's again a full-fledged trade finance transaction, okay, which is on the blockchain where the tier one supplier fractionalizes the payment undertaking and moves it to the tier two and the tier three. So blockchain technologies at scale there. I mean, quite evident. There's another chain in China called as Wunjiang blockchain, which has put up the entire rubber supply chain of China on blockchain. financiers just lap onto that and kind of discounts that invoices. So as long as the regulation supports, my view is there. So for example, I mean, allow something like that in India, M-letter, okay, and see the slowly and the strong movement from the India to UK corridor, moving towards M-letter. There are other use cases in finance as well. Like I mentioned, commercial paper. It's a short-term debt instrument, uh, highly cyclical. There's no liquidity around that at the moment. Imagine if you tokenize, allow a global wallet, or at least wallet with, let's say, your friendly countries, completely underlining the geopolitical tones. That liquidity is allowed via gift to come in commercial paper. Perhaps that market may pick up as well. So at the moment, private credit as a use case globally is using this tokenized instruments very well. Private credit typically invest in securities, and what people are doing is coming with securitization and releasing securities. And private credit, because they are not so much regulated like a bank, they have adopted it. Last I saw, around $15 billion of private credit transactions are happening on these technologies. So completely agree with Ketan. At the moment, we are seeing a slower adoption, but trade finance requires regulatory support. The moment regulation catches up, that's where the volume will pick up as well. That's my answer, Abhin, to this particular question.
Okay, so last question, Manish, for the day, and I think emulator, I guess, would require a separate session. So for the day today, I think we will close with
I will
last
actually,
question
Abhin, just
from.
take 2 minutes. I
Sure.
think some lot of people wrote to me on WhatsApp one-on-one. So I will, after this question, I will quickly try to cover that for next 3 to 4 minutes. Whoever is around can be there, and whoever can log off, I would not hold them. Is that okay, Abhin?
Fine. I mean, we'll close in the next 4 minutes after this question.
Sure,
After you finish your this thing, I'll invite Mr. Shankar to provide the closing
sure.
remarks. So the question from Subbu sir was regarding cross-border CBDCs. Will it lead to de-dollarization? And again, uh, how do you see sanctions affecting seamless transactions on blockchain? So this was the question from Subbu
Sorry,
sir.
Abhin, your voice is cracking. I don't know. Is it just my
So the
laptop? If you
question
can just
was,
give that question
yeah.
again.
So Subbu sir's question, there were two questions. I will combine them both.
Mhm.
Will the use of cross-border CBDCs lead to de-dollarization? So that is one. And again, how do you see sanctions affecting seamless transactions on blockchain?
Okay, so my view, first on de-dollarization, I think on the contrary, the moment Trump announced, again, these are my personal views, happy to learn from the dignitaries here. The moment Trump announced that no CBDC, stablecoin laws will be coming, so he's passed something called as a Genius Act in a draft form. The regulations around Genius Act will be coming in about 4 months' time. De-dollarization, whatever is happening in its current form, will not happen for the next 10 years at least. I mean, this is all the economists believe that no matter what, for the next 10 to 20 years, dollar is not going anywhere. With the stablecoin Genius Act coming in, on the contrary, I would see dollar rising up again and taking its perhaps the lost sheen. Because if you see in the market, currently there are two stablecoins which are more prominent. It's USDT and USDC. And the name itself says they are US dollar backed. One of them is $100 billion circulation, another is $60 billion. Euro backed stable coins have not managed to entrench themselves in this new future of finance infrastructure. Uh, Forget about yen stablecoin. The banks are just thinking of launching it. Australian banks like Commonwealth are thinking about launching AUD based stablecoins. So US dollar already has a $200 billion head flow. And once this Genius Act comes into the play, my personal prediction is anywhere around $800 billion will be immediately circulating on stable coins on US dollar backed stable coins. So my personal view is this would only reduce the dollarization in the short term. Now, the second question, Abhin, was how do I see seamless
Uh, do you see sanctions
sanctions
affecting,
affecting? Okay,
yes,
so
transactions on blockchain?
so uh, uh, So I have not seen any sanctions. So the major country which was preventing the movement to this infrastructure was US. It was the Biden government, where they said every token is nothing but a security. That, even a USDC, which is a money movement, they said this is not a money movement. It will be guided by SEC, and the entire set of SEC laws would be coming in. The moment Trump came in, immediately Fed has come up with a notification that no, not all tokens are securities. Securities are securities, and Genius Act will say USDC will be stable coin. So on the contrary, the sanctions will only sanctions are are going at the moment. Will US dominate this and will not allow Iran and countries which uh, where the world is against? Of course, it is governed by regulation. So, for example, if US have to adopt these technologies via Genius Act in for 3 to 4 months, I'm very sure the sanctions which are applicable in the current finance infrastructure, they will be mandating it that as well. Go back to the technology which I talked about, programmability. It's very easy to program the coin. I can implement the sanctions right away. Okay, by programming the entire infrastructure, I can just say, as long as the wallet is geotagged to Iran, just ban it. And data analysis on blockchain and such transactions around AML and all can be done much better. The kind of companies which are there, the data science companies on blockchain at the moment are slightly on the lower side. But now, where the movement is happening towards blockchain, you would see bigger and bigger, far more technical companies coming with analysis over blockchain. And because a lot of such transactions would be on the public blockchain, and these data science companies will get access to it, my view is that AML and frauds can be curbed a little bit better in what it's in the current form. So that's my
Okay.
view, Abhin.
Manish, I think we are a little past the time. I'd
Sure,
ask Shankar sir to give the closing remarks, and still, if we still have people there on the call, you can probably take the WhatsApp
sure.
questions subsequent to that. Shankar sir, just a minute, let me see if I can ask to unmute you.
Thank you, Manish. That was wonderful. The way you put the entire concept of blockchain was really very simplistic and nice, and I enjoyed that. I must tell you this: the first time I learned about DeFi, I'd say going back to maybe 6 or 7 years ago, I thought DeFi was what you defied people. I mean, you defy. Uh, so I had to go back to figure it out, and I kid you not, I actually Googled the term to understand it. Shows that you do need to keep in touch with new words and technology as they're going in. I think the way you put things like the golden ledger, the way you spoke about themes like tokenization on steroids, and by the way, I'm using the AI companion to read through all the things that you put together. So I'm using technology as well over here. Was very nice and simplistic. CBDC is a challenge, and by the way, retail CBDC in my mind is dead. Wholesale CBDC perhaps will find its way. And outside of India, in the e-rupee style and the RMB, I don't think there are anyone else outside of Nigeria that is doing this in a good way. But I digress. I thought your session was very well done, Manish. You have tremendous knowledge. You spoke about things that, for example, I follow very closely. You spoke about the Genius Act. You spoke about USDT, USDC. I follow those themes very, very closely. So it was very nice to hear your views on that as well. Very enjoyable. Thank you very much. And we should look forward to having some more sessions with you. MLETR is a subject on its own. I don't think you can do it in 3 minutes. It will not be fair on you and on MLETR. I'd say we should do it with some more depth, perhaps at an opportune time. But thank you very much. It was wonderful. Thanks, Manish. Back to you, Abin.
Thank you, sir. Manish, if you still have queries which you want to take, you can. But I think most of our session is done for the time. Or you can go and respond individually. You can respond individually to
Yeah, so
to
what we
others'
can do is I've shared my coordinates earlier. Happy to whenever you guys want to reach out to me on WhatsApp, LinkedIn, I'm happy to enter into one-on-one session with all of you. I learn a lot from TFW group. Happy to contribute that time, and you can write to me as well, and I can answer all your questions. And maybe as Shankar said mentioned in May, me and Andre sir, we can do emulator session in a dedicated way.
I think that would be good. Thank you. Thanks a lot, Manish. And Dara, we end up on close the session over here. Anything from your side?
No, it's fantastic. I mean, like if Priyanka is around, Manish, it's a fantastic session. Like you make it so simple and so engrossing, brilliant. I mean, like I couldn't leave my seat even though I'm only in the audience and I'm supposed to speak. So, Avin sir, if you can formally thank Manish profusely and everybody who is in this session and for actively participating, including Andre, Ketan, Subbu sir, everyone. Thank you,
Thank
Manish. A
you.
fantastic session.
Thank you so much, sir, for giving us the opportunity. Really
Thank
loved
you.
talking to the entire group.
Thank you. Thanks a lot. Thanks a lot, Manish. Thanks,
Thank you.
everyone. Thanks, Shankar sir. Thanks, Priyanka, who's joined even without with a very patchy network connection. Thanks, everyone. And have a good evening. Have a great weekend, everyone.
Thank you. Bye bye.